Hi, and welcome to the Stockscores Market Minutes for June 18th, 2012. This week's topic is trader seasons. I'll talk about that in a moment. But first, a reminder that if you would like to receive my weekly newsletter, it's completely free. Just go to the address on screen. That's stockscores.com/newsletters.asp. All right, we're going to talk this week about alpha stocks and the season for stocks that are moving faster than the market. Now, alpha stocks are those that are trading on their own story. Most stocks have a correlation to the market, but if you are going to beat the market, you have to find these stocks that are trading on their own story and are able to outperform the overall stock markets. Well, alpha stocks require a catalyst. They require some bit of fundamental change that justifies them moving on their own story. So an oil company that has found a new discovery of oil is going to be able to move upward no matter what the price of oil is doing. A pharmaceutical company that discovers a new treatment for a disease is going to be able to move no matter how poorly the overall market is doing. Well, we get a lot of alpha stocks in earnings season because at that time of year there's a lot of catalysts for stocks to trade on their own story. Companies are announcing earnings, they're announcing their outlook for future earnings, and that can drive their stocks to perform abnormally. Now, abnormal activity in terms of price and volume are the footprints of alpha stocks, and if we are going to find these kinds of trades, we need to focus on looking for those things: abnormal price action and abnormal volume. But we're going to find more of those during what I call alpha season: January, April, July, and October. These are the months when most companies announce their corporate earnings. It's always the month after the end of a quarter. And at that time, there's lots of potential for alpha. In a typical time right now, this being June, I might find 1 to 3 alpha stocks a day. But during earnings season, well, now you can find 10 or more each day. So keep that in mind if you're feeling a little bit like the market is too slow, there's not a lot of action right now. You're right, but that will change soon. Here's a chart of the S&P 500. Let's do some analysis. Of course, the election in Greece was good news for the stock market. I think the market started to price that in late last week as we saw prices surging upward. We are now just starting to get through the top of that downward sloping channel. So the market is not sure whether it has what it takes to take stocks up here, but we are at a critical point where we may finally break the pessimism that has been in the market for the last few months. I'm not yet ready to say jump in and buy the market because we have rallied into this level and because volume was very light today, but I do think that the market has the potential to make that break of pessimism, and we should watch it very closely. Toronto Stock Exchange has a similar chart. We've been more or less going sideways for the last 5 or 6 weeks, but we are now testing that downward trend line, that point where we could break the pessimism. And so one more strong upward day would be a decisive showing for the bulls that they have taken back control of the market. This is an important chart because it shows how fear has been broken. The election results in Greece meant that Greece wasn't going to leave, or is likely not to leave, the European Union, and that is good news for the market, at least in the short term. And we saw the VIX have a pretty strong downward move over the last 3 days and break that cycle of rising bottoms. So while the fear is coming out of the market and the potential for a big catastrophe is coming out of the market, we still don't have a strong show of optimism by the buyers. And we can see that when we look at the Treasury bond chart, which is what I have here on screen now. This chart remains in an upward trend. In other words, money is still in the safety of U.S. Treasury bonds, even though they pay very low interest rates. People still want to own these things because, quite frankly, they don't know where else to put the money. U.S. dollar, you would expect on the news that came out of Greece, would actually go lower, but it is hanging in there. And that shows us perhaps that the market is starting to think that the European Union is now going to have to print money to save Italy and Spain and try to stimulate their economy over there. Well, of course, if the euro is being printed, it goes down. That helps the US dollar go up. And so we're seeing that US dollar hang in a fairly bullish pattern, although it's been sliding lower for the past few weeks, that is what we call a flag pattern, the trend into that pattern is up, and so the momentum is still upward. And so even though the US probably has to print some more money as well, we do get a sense that they're going to be the worst of the group, and that as the world works to stimulate its economy, some money is going to want to go to the US dollar as a safe haven. Gold is a hedge against printing money, and we can see that it has been moving up for the last month. Although it broke the long-term upward trend line about 6 weeks ago, in the short term, people are trying to speculate that gold will be that safe haven as countries print money. If that downward trend line that I've drawn in red is broken, that'll probably coincide with a heightened expectation for more liquidity being added into the market by European central banks, Canadian central banks, perhaps not Canadian, but more so the US central bank. Generally, world central banks are going to be looking to stimulate their economies, and that should make gold a place to be. So it's a very confusing picture on gold because that long-term upward trend line has been broken, but we are now testing the shorter-term downward trend line. And whether this trend line holds or not is really the key thing that we need to watch. I'm going to be watching this chart very closely because I think it'll give us a good indication of what's going to happen with Europe or with the central banks of the world. Oil is in a bearish pattern, remains in a bearish pattern. Simply put, the global economy is slow and money is not going into, or money is not needed to be, oil is not being purchased by the countries of the world as they have a rampant economy. Instead, the economies are pretty slow. So my ratings then, I am neutral on stocks in Canada and the US, and I am neutral on gold simply because all of those things are really testing those downward trend lines and they might break soon. I remain bearish on oil. The threat of Greece leaving the EU is lessened, and now the markets are looking for some kind of stimulus to get the economies going. If there is that stimulus, it'll help stocks, it'll help commodities, but in the long run, I'm not sure how much good it's going to do. We are on the verge of reversing pessimism, but we need to wait for that show of strength. We need to wait for that decisive break of those trend lines. That could come tomorrow, but it could also be that those trend lines hold up when we move back lower. So I want to wait until I see that strong break of the trend. Well, that has been the Stockscores Market Minutes for June 18th, 2012. Have a great week in the market and trade well.